If you like high risk with high rewards trading, well then SPY-T Q trading just might be the best trading strategy for you. SPY-T trading has three parts. First, it's an overnight swing trade, taking advantage of the overnight gap. And the second part is amplifying this opportunity with options in a specific ratio, 2-to-1, sometimes 3-to-1. And that's where we get into the SPY-T Q trade. And the third part is that we use a specific signal, either up or down, and we find that at spytomorrow.com. And the SPY Tomorrow yellow algorithm is doing pretty well in this current low volatility market. If you're familiar with SPY-T trading, you know generally we focus on a 2-to-1 options ratio. If our signal says up, we'll buy 2 calls and 1 put. If our signal says down, we'll buy 2 puts and 1 call. However, with SPY-T Q, we're a little more aggressive. If our signal says up, we buy 3 calls to 1 put or 3 puts to 1 call if our signal says down. The advantage to using these ratios as compared to directional trading is that we're protecting ourselves with a hedge. So if our indicator says up, but there's some big news in the morning, well, we still have an opportunity to minimize our loss, or if the market completely crashes, still make money on the other side. And that's just not going to happen with the directional trade. So if you're trading directionally, and there's nothing wrong with that, I sometimes place directional trades, but the thing is, if the market changes suddenly, well, then your trade is toast. And SPY-T trades have disadvantages too. The biggest ones have to do with volatility. If volatility goes down a lot, both your call and put could lose money, especially if there's very little market move overnight. So a flat open is not good for a SPY-T trade. Of course, all is not lost if there's a flat open. That just means you have to do a little day trading to get yourself out of the trade. Follow the calls up and follow the puts down and hopefully get the best prices possible. So ultimately, you minimize your losses or even possibly gain or maximize your gains. However, with the SPY-T Q trade compared to the SPY-T A trade, which is a standard for SPY-T trading, you don't need as much of a market move to make money, kind of like a directional trade. However, if the market moves the other direction, you need more of a move the other direction to start making money on the other side. Yet, if the market completely crashes or totally booms the opposite direction of your trade, well, you have a good chance of making money and not missing out on the big moves of the season. Of course, having a solid up or down signal makes your success as a trader that much easier. Currently, SPY Tomorrow is doing really well using the yellow algorithm, which seems to do much better in the lower volatility markets. So I encourage you to test it out for yourself. Take on the 30-day SPY-T challenge. At the end of the trading day at 4 o'clock, check out the free signal, either up or down. And if the signal says up, you'll buy 3 calls to 1 put of equal value. If the signal says down, you buy 3 puts to 1 call of equal value. So what do I mean of equal value? Well, here's an example. If you bought your calls at $2.50, that would be $250 each. Times 3 is $750. And you would buy 1 put of equal value to each call. So the put would cost $2.50 or $250. And the next morning you would sell your options to minimize any losses or maximize your gain. So let me know how you're doing in the comments below, and I'll see you in the next video.